Jim, thanks so much for being with us. I remember we spoke when this crisis first started, when we first saw that dramatic fall in March. We spoke at that point, trying to get a sense, trying to get a bearing of what was going on. 3 months down the line, where do you feel we're at? Do you feel we've underestimated the extent of the damage, the kind of crisis that is unfolding, or do you feel we're actually starting to get out of it? Where are we placed?
I first of all, I don't know, as I probably said then. Secondly, with some caveats, important caveats, I think we kind of know better how to navigate it, and with some very good examples, how to not necessarily get out of it. I think that only happens with a vaccine, but certainly how to allow our economies to start functioning again. The UK reported its monthly data for April showing a 20% GDP decline. It's not really news, in my opinion, because we've sort of known ever since China back in February that if you have a severe lockdown, that's what happens. So there's a lot of focus on that in Western media this morning, but I don't really think it's interesting. What's more interesting is the countries that have opened up the quickest and whether they're seeing any renewed infection rates or not. And most of the countries that I'd describe as the more sophisticated and inclusive seem to be doing pretty well. New Zealand perhaps being the absolute best, where it supposedly has no infections whatsoever. Australia getting there very quickly. Many other parts of North Asia doing okay. And some parts of Europe opening up without too many problems. Against that, you've got the United States that looks a bit of a mess still. Yourselves in India that seem to be having some challenges. And sadly, a number of parts of Latin America and other parts of the emerging world also, possibly because of a few weeks behind. So if I put it all together, I certainly think we're way through the worst of the world economic slowdown, but we're still not sure as to how quickly we can get back to anything vaguely close to normality.
Okay. Jim, earlier on, you'd also, talked about how it was at that time perhaps a good thing that we had seen the virus reach India a little later in its global journey. I'm being very politically correct.
It was a comment that seemed to cause a lot of attention inside India.
Yes. So, and I know you clarified on that, but today, now that we're actually number 4 in the number of cases, does this once again put into the spotlight the kind of risks perhaps, for the Indian economy, our ability to handle a crisis of this magnitude? I mean, we're doing all we can. We know that, the government has been attempting all efforts, of course, and our recovery rate's very high, but we're still in the top 5 amongst the world.
Without wanting to resurrect the controversy surrounding what I said, I mean, I think as weeks go by, part of the complexity of the challenge of this pandemic is those societies where you have thousands of people living in very, very close proximity and find it impossible to socially distance. How do you stop the pandemic from spreading? And India is in a very tricky position in that sense, and that's kind of what I originally meant. I think it raises some really important long-term strategic issues for Indian society and policymakers. But in particular, I think it should add to a lot of longer-term focus on the quality of how one can live one's daily life in terms of the sort of housing and accommodation people can live in, but also the attention given to India's health and education systems, which I think are so important. I've written about this in the past few weeks, that if you look at indices of sustainable economic development, which I used to do in my days as chief economist of Goldman Sachs, it's not surprising to see that the countries that score the highest on these indices are the ones that are coping the best with this pandemic. And it highlights the need for countries to spend wisely on what I'd call, broadly speaking, more inclusive growth and better facilities relating to things ranging from education to housing.
Jim, how do you see that happening when the government is already finding itself constrained for funds even to kickstart the economy, at this critical juncture? We've seen a slew of reforms which may otherwise be called progressive, particularly, let's say, for the agri-industry and certain other pockets, MSMEs and so forth. But there has been, a huge call from industry for further fiscal stimulus.
So I, in the spirit of never letting a crisis go to waste, and it's not risk-free, but if I were one of Mr. Modi's close advisors, I would be encouraging him to take a bit more risk on the fiscal deficit, if it was going to be done for things to boost India's long-term growth potential, in particular spending on health and education. The only way countries can prepare themselves for the future for these kind of things is by having the whole population really understanding what's necessary and how to cope with these kind of issues, and have a health system that is there to help. In India's case, all 1.3 billion, rather than just the very privileged that get access to it because they have the money, as well as much better social housing. And I think it would be very wise of India to spend more. I think for smaller emerging economies, or those with a more recent history of considerable financial difficulties, they don't have that chance. But I think India could probably get away with that, and I certainly would if I were an Indian policymaker.
There are differing views coming in from rating agencies, some that feel that perhaps India hasn't done enough, some that have been very positive on the reforms enacted so far, and that feel that India will actually survive this and, manage to get back on the growth path. Which side of the fence do you feel we're on currently?
So first of all, on the ratings agencies, with all respect for what they do, I think there's sometimes a danger that countries become obsessive about what a rating agency is going to say, and obviously it's important because it affects the credit rating and the ability to borrow. But I would concentrate on doing the right thing, whatever the right thing is, because the rating agencies often end up being a lagging indicator rather than a leading indicator. And I think it's important to focus on what can I do as a policymaker with the reality of this crisis to permanently improve my country that otherwise I couldn't. And in that sense, I would be in the camp of taking more calculated risk. Or the way to put it in more classic economic terminology, I would split fiscal spending into spending for investments and spending for consumption. And I think things to do with health and education and to some degree housing would all firmly fit in the camp of investment spending. And a smart rating agency shouldn't worry about that.
Okay. So what's the outlook then on growth, whether it be global growth, whether it be India, and how you see us relatively fair, given what we're seeing in global economies right now? Do you feel we'll outperform, given the demographic? Is that possible when we're seeing the kind of economic pain that we're seeing currently?
So I haven't yet said, of course, anything at all about vaccines or treatment drugs. And at the end of the day, the absolute crucial thing for the world is whether we find a vaccine. And since we've last spoke, there's been further encouraging signs from the leading vaccine candidates, and it's not impossible that, amazingly, and this is one of the great things that's going on in this crisis, the creativity and innovation of the pharmaceutical industry. It's not impossible that we could have a vaccine as soon as the autumn or September. And if that were the case, then I would imagine from the fourth quarter onwards, we would have a spectacular economic recovery in many, many parts of the world. Without a vaccine, it gets obviously trickier. But even so, linked to what I said before, those parts of the world, particularly those that have been tough the quickest and don't have the dilemmas of the intensity of living space that urban India has, they seem to be coming out of this not so badly so far. China being, obviously in terms of the world as a whole, an important example. On many indicators, it's now starting to look like China is not far off being back to pre-crisis growth, with the crucial exception of trade. But the dilemma we have is the other huge part of the world that matters to us all, the United States, where it's never really treated lockdown as seriously as elsewhere, except New York, perhaps. We see the opening up seems to be resulting in an acceleration in cases, and that is more troubling. And so I think we're in a pretty uncertain phase. I have to say I tend to side a bit more to the optimistic case. People sort of forget that a lot of the severity of this economic weakening is because of the fact government shut us down. So if we can open up without spectacular acceleration in infection, I think the world will have some sort of recovery. But at the end of the day, the magical ingredient is going to be a vaccine.
Yeah. So what if we see a second wave before that vaccine actually hits? And we don't even know if there'll be enough of the vaccine to go around, the price. There's so much that's still unclear.
I mean, I think from what I follow, and I do get privy to some discussions of this because of my past work in antibiotic resistance. I think we can be reasonably confident that the affordability of the vaccine is not going to be a global issue in this context. And importantly for India, of course, with one of these leading candidates, AstraZeneca, that's based in the UK, they've done a deal to potentially produce I think I saw as much as 1 billion doses in India before the year is over. And so I think the affordability isn't the issue. The issue is whether it works or not. And, putting that aside, a big second wave beforehand would be a disastrous development for the economic recovery and would be really bad for financial markets, given this remarkable rally that equity markets have enjoyed since March, which as I hope you remember, I thought was possible. But, we've traveled a long, long way. And now we need to be sure that we can open up more without a second wave coming. And the markets are going to be followed. As we've seen in the latest week, the markets are, not surprisingly, very sensitive to increased case infection in big countries.
We are definitely seeing that with markets in the US, particularly seeing their biggest fall again since March. Is there also concern that that we may actually have, was there actually disappointment perhaps, apart from concerns over a longer recovery, about further risk of infections cases? We had the Fed meet as well, and while there's continue to be accommodative, of course, they put off any further announcements, at least for the time being. Is this market rally one that we can attribute to liquidity, which a lot of other experts have been saying is not the only thing, that there's actually sheer value to be found in the market at this point of time?
I think it's a very interesting question. Certainly, if you look at the trading pattern of the past week, it does lend worryingly support to the view that the only thing that's fueling this market is the Fed, because after the Fed statement is when the market sold off. I actually read the Fed statement as being pretty dovish. So in that sense, it's quite troubling if the market just sort of, in order to rally, just requires increasingly more juice from the Fed, then we have a problem. I don't think that that's what it's all about. I think it's more because of the increased case infection that happens to coincide this week. And by and large, and one of the reasons I found it not as difficult as I thought I would to understand it, the markets have broadly traded the rate of change of infection and the vaccine discovery curve ever since February. And I suspect that will, broadly speaking, continue. Below it, because we've had such a huge rally, there isn't a lot of value anymore. And we're back. A lot of us were saying, of course, back in the start of the year, that one of the problems is that particularly the US market was so expensive. And here we are, pretty much back to the same levels, despite the fact the US has got double-digit unemployment. So it's definitely not cheap anymore. But I do think in the context of the emerging world, there are other parts of the world where markets haven't recovered as strongly and were cheaper than the US beforehand. And I think so long as the Fed stays accommodative and we do see infection rates not picking up further from here, probably the rallies that could happen would be stronger in the emerging world. And bringing it right back to India, because, of course, this never-ending hopeful story of India's demographics. If India could show some signs of stabilization of the curve and/or we get the vaccine story, partly because it's such a domestically driven story, India probably would be in a position to resume a much more optimistic path because the demographic story isn't going away.
That's great to hear. Do you also buy into this? There's been a lot of talk about India gaining advantage versus China. At this point, do you see merit in that? Do you actually see companies shifting here? We haven't seen a flood as such at the moment. But is there merit in that?
I don't like to be too much of a cynic, and my nature tends to be optimistic as much as I can. But my dilemma with this presumed benefit for India is if it was so easy, India would have probably been able to do these things for the past decade. India needs to, in order to be a serious competitor to the kind of things that China has done historically, India would have to have a much more organized and competitive labor market in manufacturing and the whole supply chain. Obviously, for services industries, the supply chain role India plays is pretty world leading. But on the manufacturing side, it's not something that India can just simply turn a tap on and say, now we're doing it. You have to have a whole series of things in place. And going back to Indian policy reform, it would require Modi to be a lot more bold about foreign direct investment rules and many things to do with the labour markets too. So the potential is definitely there because this crisis is certainly weakening China's role in the global supply chain. And it does give India a chance, but it needs to respond with proper policy initiatives rather than just hoping that it will happen.
Sure. What's the biggest risk, to growth coming back, to India tapping in on its demographic story, to recovering faster, as you mentioned? Would it be the health of the financial sector? Would it be NPAs? Would it be lack of clear policy reform from here on? What would you say is the biggest risk?
I think it's all of those things. India has a lot of risks, as we all do. And going through this crisis, I think about it a lot, including on a personal basis. The reason why I have Mr. Brick stamped on my forehead is that, I came up with that idea during the immediate days after the crisis of 9/11. And it's taught me that how any of us, whether we are individuals, companies or countries, how you respond in a crisis, which at the end of the day There's nothing we can do about the fact we are in one. But how you respond to it determines often how you perform in the whole coming era. And I think for India, this should be regarded as a huge opportunity to deal more seriously with a lot of structural challenges that India, for various reasons, has not addressed in the past decade. I've been reflecting back a lot on a paper I wrote in 2007 entitled "The 10 Things That India Needs to Do to Reach Its Potential," which Mr. Modi I know has read, and I've discussed it with him personally. If India could tackle just half of those things, we would be talking about India growing by close to 10% the next decade. But it needs to do them rather than just talk about them.
12 to 10, that would be great to see back on the screen. The geopolitical reset, Jim. I remember, when we had the trade war in the headlines, and I think sometime last year, everyone was talking about, economies turning inwards. Today, today we're once again questioning whether trade dynamics will continue as they were, whether globalization will continue to be. You've talked a little bit about that, but share with us how you see things being reset post-COVID.
So again, this is pretty complex, and my strongest comments is I think the general overall commentary on it is far too simplified. There's a sort of presumption that globalization is over. But when you look at what's going on in technology, just the way you and I are having this conversation now, for example, or you look at what's going on in the pharmaceutical industry, as we've discussed a bit on vaccine development, that the global coordination is absolutely spectacular. As I touched on, because of my role in antibiotic research, I'm reasonably aware of the global pharmaceutical industry and the kind of cooperation and working together going on in that industry is remarkable and something I would have never have dreamt of 6 months ago. And the second thing to say, to follow that up, is at the end of the day, the core thing which really I believe drives globalization is the consumer. And if every consumer continues to want what they think they can afford and desire, and they want to get those things wherever they come from, that will drive globalization. And it will mean that the forms of globalization we go through may vary, but the idea that globalization is coming to an end simply because we have some political leaders that want to talk about it not being so good for their country is very eye-catching, but it's quite superficial. And certainly as it relates to the United States, and to some extent this is why it is an opportunity for India, unless the US permanently raises its savings rates, it is going to depend on capital from the rest of the world, which means the US will run trade deficits, which means the US will import more than it exports. And yes, it can talk about stopping everything from China in theory, but unless they raise their domestic savings rate, that means they just have to import things from other places. And, that is the reality, whether Donald Trump likes it or not. And so I am, as you can tell, I'm a bit skeptical of this talk about globalization being over. I certainly think the scale of China's domination in the global supply chain is over, but it was kind of over anyhow, because China is already moving on to a new phase of economic development.
So who do you see emerging as the new superpower?
I think the one thing I didn't say there, and is one of the less heartfelt things about this crisis, is 2008, one of the reasons why we got out of that mess reasonably quickly, if not permanently, is because of incredible international cooperation. And we are not having that amongst policymakers during this crisis. And I think it reflects partly the characters of some political leaders, but it also reflects the reality that we're sort of stuck in a time vacuum where the US is losing its global dominance, and we have this big single-party, unelected democratic country called China that's become big, but we don't know where it's ultimately going to be. And then we have no one else that's close to challenging either of them. Over the next 20 years, India is actually the only other country in the world that could potentially be anything like the size of these guys. And bringing it all the way back to what we've discussed, this is why it's not an opportunity to allow to go to waste. If India undertook these reforms in a major way, what it would do, I think, would accelerate the relative positioning of India in the world in the next 20 years. But there's no other countries in the world that have either the size of people or economy that can be one of those three. The EU collectively could be, if it got its act together, but as we see yet again with every global crisis, the EU seems to struggle as badly as anywhere else.
Fantastic. Jim, we'll leave it there. But thank you so much for joining us. Always, feel we can extend that conversation endlessly. But we look forward to having you back with us again soon.
So one of these days, I look forward to being able to get on a plane and come and see you there personally.
Yes, absolutely. We look forward to that. And I hope it's sooner rather than later.
Okay.